So you're thinking about getting a new car and you're not sure if it makes more sense for you to buy the car or if you should lease the car. Because you're constantly hearing some people say you should be buying your car and then you hear other people saying you should be leasing your car. And it seems like both sides make really good arguments as far as what's best. Well, by the end of this video, you'll have a clear understanding of both options and you'll have everything you need to know to make the right decision. I'm going to be going over all the pros, the cons, and when each option makes the most sense for you. And then what will happen is you'll end up becoming one of those people that are telling people which option is best for them. So let's get started. So buying a car is the most common way of getting a car. It's pretty much straightforward. First, you'll find a lender, which could be a bank, credit union, or any type of financing company. And that lender is going to be the one that actually pays the dealer for the car. And then you'll pay that lender back over time, typically with interest. So what this does is spreads the cost of the car over a period of time, which makes the car more affordable. For example, let's say you wanted a car and it's worth $30,000 and you decide you don't want to pay cash for it. So what you'll do is you'll find a lender that you can borrow the $30,000 from so you can actually purchase the car. Well, technically they'll be purchasing the car and you'll be paying them back. And let's assume the lender's going to charge you a 6% interest rate over a 3-year period of time. So using all those factors, your monthly payment will be $912.66. And you'll be required to make that payment to the lender every single month until that 3-year period is up. And that payment will include the principal amount that you originally borrowed plus the interest rate on top of that. And the interest rate you'll receive is pretty much based on your credit worthiness and the length of the loan. And once you pay back the loan, you'll receive the title of the car and then you actually own that car free and clear. Nothing more, nothing less. So now let's see how that compares to leasing a car. Now when it comes to leasing, it's not as straightforward as buying. Well, at least not until you fully understand the process. So car leasing is an alternative to buying the car. So when you lease a car, what you're essentially doing is just renting the car for the period of time. Usually that period of time is about 3 years. So during that period of time, you'll make monthly payments to the leasing company. And at the end of the lease, you'll either return the car or you'll purchase the car. And during that time, the leasing company is taking into consideration the depreciation of the car, and that's what determines your monthly payments. So car depreciation refers to the reduction of the value of the vehicle over time due to wear and tear, age, and usage of the car. So what they're really doing is estimating the car's residual value. So which is the car's expected value at the end of the lease term. So then it takes that value and then subtract it from the original value, and that determines what the depreciation will be during the period of time you lease the car. So let's use that same example of the car being worth $30,000. And the leasing company expects for the car to be worth $20,000 once your lease is over. So the depreciation of that car would be that $10,000 difference. So your monthly payment will only be based on that $10,000 of depreciation that's going to happen during your lease term. So in this example, your monthly payment will only be $431 a month during that 3-year period. And that's also assuming a 6% interest rate. Well, technically, leasing companies don't use the phrase interest rate. Instead, they use a phrase called the money factor. And that money factor just represents the amount of interest that you'll be charged during that period of time. So don't let that terminology throw you off. Also note that the longer the lease term, the more depreciation that will happen, which means your monthly payment will be higher. So once you really grasp the concept of depreciation and how that affects your monthly payment, the entire concept of leasing becomes a lot more clear. It's also important to note that all cars don't depreciate at the same rate. Factors like the make and model of the car, its age, the mileage, and market demand all impact the car's depreciation rate. Because some cars just do a better job at maintaining their value. And another thing with leases is that most of them are what's called closed-end leases. And what that means is the residual value of the car is determined at the beginning of the lease. And that could be a good thing because you know exactly what the car will be worth at the end of your lease before you even drive off the lot. And that's important because even from day one, you can start planning on if you want to purchase the car at the end of your lease term. Okay, so now that we have understanding of what buying and leasing both look like, let's start looking at some pros and cons. One of the biggest advantages of buying a car is that you'll have physical ownership from day one. So you have to understand that because you have a loan, the lender actually holds the title of the car until you pay it off. However, even from day one, they typically don't put any restriction on what you can do and what you can't do with that car, which means you're in complete control. So if you decided you want to take your car and go paint it neon green, there's nobody that can stop you. And another benefit that comes with buying is that you can drive as much as you want because there are people that love to just jump in their car and go. And you might be one of those people. And when you buy a car, you don't have to worry about any annual mileage restrictions or any fees associated with it. Another benefit to buying is that once that loan is paid off, your payments are literally done. So if you're able to keep that car years after that loan is paid off, you will literally be able to save all that money you were once putting towards that car note. And usually that's a substantial amount. And that money can now go towards any investments you want to do or even maybe a down payment for a future home. Another thing you could do is you can always trade that car in to get a new car whenever you want. Because even though cars do depreciate in value, they still maintain some type of value. And whatever that car is worth will bring down your out-of-pocket expense when it comes to buying that new car. Another thing you'll be able to do is actually sell the car as well. It doesn't necessarily have to be traded in. You can sell the car in the open market and just pocket the cash. So just know that buying a car gives you quite a bit of flexibility. Now, when it comes to the downsides of buying a car, I would say one of the biggest downsides to buying a car is that it can get pretty expensive short term. Meaning that during the duration of your loan, you can expect your monthly payments to be pretty high. So what's happening is you're taking the full value of that car and getting it paid off in a few years. Not to mention, you'll also be paying interest and tax on that full amount as well. So side by side, your monthly payments are almost always higher when you're buying versus leasing. And of course, that's if we're referring to an equivalent car. So because of these higher payments, it'll have more of an impact on your overall monthly household cash flow. Another cost that you'll run into is your initial down payment. Some lenders require you make a down payment just to qualify for the loan. And unfortunately, that's not always feasible. Another disadvantage to buying is the ongoing cost of maintenance and repairs. Because as the car begins to age, it will require more and more maintenance and more repairs, and that can get pretty costly. And the last thing you want to be aware of is the depreciation. When you buy a car, the value of that car drops dramatically as soon as you drive off the lot. And over time, that car continues to lose more and more value. And eventually, it'll be worth just a fraction of what you originally paid for it. Now, when it comes to the benefits of leasing, first and foremost, leasing usually means a smaller monthly payment when you compare it to buying. Because when you lease, remember, you're only paying for that expected depreciation versus paying for the entire car, which means you could potentially afford additional features and benefits, giving yourself the most bang for your buck. Another advantage to leasing is that your car will always have the latest technology. So obviously, cars get more advanced every year, and when you buy a car, it's easy for it to get outdated. But with a lease, you'll get a brand new car every few years. And that means you'll always be driving the latest model with the newest technology. And this is something that can be very appealing for someone that loves to stay up to date with the latest gadgets and the latest features. Another thing that leasing will give you is a warranty that covers the car for the whole term of the lease. So as long as you don't go over the mileage or damage the car in any kind of way, you don't have to worry about any significant out-of-pocket costs. And in some cases, periodic maintenance is also included in the lease as well. Another benefit that leasing is going to give you is that when it's time to trade in your car, the process is extremely simple for you. You don't have to worry about selling the car or trying to negotiate the car's value. You simply just return the car to the dealer at the end of the lease or buy it at that predetermined purchase price. And this could be a big relief for people that don't want to have to worry about the hassle of trying to sell a used car. Additionally, leasing can also save you some money on sales tax depending on where you live. Because in some jurisdictions, you only have to pay sales tax on the amount you put as a down payment and whatever your monthly payments are. Versus when you buy a car, the tax is on the entire amount of the car. This is why leasing a car can definitely be a lot more affordable for someone. And lastly, when you lease a car, it's a smaller down payment versus if you were trying to buy that same car. And that's definitely appealing for someone that doesn't want to pay any upfront money. So now let's jump into the disadvantages of leasing. The first one is pretty obvious, and that's when you lease a car, you don't own that vehicle. The leasing company holds the title and you have no ownership interest in the car at all. So that means the leasing company can place strict limits on how you use the car and what you do to it. And if you don't follow the rules of that contract, that car can actually be repossessed. Another disadvantage to leasing is that you will always have a car payment. Because when you buy a car and you pay off that loan, your payments will stop. But when you lease a car and that lease term is up, what'll happen is you'll end up getting a brand new lease from scratch. And this means your monthly payments will be a lot more inconsistent versus if you were buying. Additionally, with vehicle prices rising, you can expect each new lease to be more expensive than your previous one. And that's something you definitely want to take into consideration. Another disadvantage to leasing is it comes with strict mileage limits. And exceeding those limits can be very costly. You actually pay for each individual mile that you go over that limit. And excess mileage charges can range from 15 cents to 40 cents per individual mile. And that can definitely add up quickly. So you'll need to have a reasonable estimate of how many miles you expect to drive before even thinking about getting the lease. Also, if you're the type of person that likes to customize your car, a lease definitely will not work for you. Because most leases require that you return the car in the same condition you took it in, with the exception of reasonable wear and tear. This means you can't make any modifications to the car that you know you won't be able to undo before you take it back. Another disadvantage to leasing is that you don't get any cash when you turn your car in. Typically, when you turn the car in, you'll walk away with nothing. and that's regardless if you made a down payment or not. Instead, you may end up having to pay for things like excess mileage, excess wear and tear, or disposition fees at the end of your contract. And lastly, you have to understand that a lease is a binding contract, which means there could be surprise costs that do come up at the end of your lease. Estimating how much you'll have to pay because you know you went over your mileage will be pretty straightforward, but it's not as easy to determine how much you have to pay if they consider the car to have excess wear and tear. So now that we have the pros and cons out the way, now it's time to determine when leasing makes the most sense. So if you're the type of person that loves the idea of always driving a new car, lease may be a great option for you. Because remember, when you lease, you literally get a new car every few years, so you'll always have the latest and greatest technology and the newest model car. Leasing also eases your monthly costs and makes it a lot more manageable. So this may allow you to drive the type of luxury car that you probably wouldn't be able to afford if you were trying to buy it. So if that's something that interests you, then leasing may be best. Additionally, if you don't have to worry about any repairs, leasing may also be the best choice for you, because most cars that you lease will still be under the factory warranty, which significantly reduces the chances that you ever have to pay out of pocket when some type of repair may come up. And that could definitely give you peace of mind knowing you're not going to run across any of those type of unexpected expenses. Also, if you don't have the money for a large down payment, leasing will also be a better option for you. Because remember, you're only paying for the depreciation of that car, so any down payment you make would only have to go towards that smaller amount, which essentially keeps more money in your pocket. Now here's where buying makes the most sense. So if you're the type of person that likes to take road trips, or you know you're going to put a lot of miles on your car, you're definitely better off buying versus leasing. Because when you lease, remember, you have a limit to how many miles you can drive, and if you go over that limit, the fees can be very excessive. But when you buy, you're in complete control of how often or how much you drive. Another thing is that if you know you can afford to put a large down payment on the car, it may make more sense to buy it versus leasing. Because when you put a large down payment on the car, you eliminate a lot of financial risk. And that may also allow you to have significantly lower monthly payments. Another thing is that if you plan on owning this car for a long time, if you buy it, you can save a lot of money over the long run. Because remember, every year you can keep that car after the payments are done, it's like you have a free car. So when it comes down to it, is it better to lease a car or is it better to buy a car? I want you guys to put in the comments which one you guys think is the best now that you know the pros and cons. Now, unfortunately, there's no one size fits all when it comes to this question. So when trying to figure this out for yourself, some things you definitely want to take into consideration are your financial situation and your driving habits. I would say those two hold the most weight when it comes to making that decision. Also take into consideration your monthly budget and how much you can afford to pay up front. And definitely do a calculation of how many miles you typically drive on an annual basis so you can see if it really makes sense one way or the other. And once you've decided on which route you want to take, I would advise using some type of lease versus buy calculator to see what the options look like on paper. And that's something you can easily find on the internet. And lastly, make sure you shop around for financing and compare rates to make sure you're getting the best deal possible. So I hope this video helped you have a better understanding of what buying versus leasing actually looks like. And if you have any questions, definitely drop them in the comments below. Don't forget to hit the like button and subscribe to the channel, and I will see you in the next video.